Good morning, ladies and gentlemen. My name is David Brear, and welcome to episode 70 of the 11FS FinTech Insider Breakfast Show. In this show, we bring you the best and the brightest from around the fintech and banking landscape every single weekday, straight into your homes at 8:30 BST. Today, I am super duper thrilled to be joined by Lex Sokolin. Did I get that right, Lex? I
You
was a
got
bit.
it.
Yeah, I was a bit nervous about that pronunciation, but nailed it. Woohoo! Who is the global fintech co-lead at ConsenSys. So on this morning's show, what we're going to be doing is talking about the relationship between blockchain and fintech and how Lex sees the evolving future in terms of everything that's happening with COVID, but actually much more broadly than that. I think blockchain is really at that stage now where people are really using it for large scale things. So Lex, good morning. Thank you very much for joining us.
My pleasure. Thanks for having me on. I'll warn you that the caffeine has not yet entered the bloodstream. It's still dissipating. So we'll see how this goes.
It's okay. I think so far this morning, I think I've had enough for both of us. So I'll keep it going. As always, guys, over on LinkedIn, we love getting your questions. So if you leave them over in the comments bar, we'll weave them into the conversation as we go. So for anybody who doesn't know Lex, can you just tell us a little bit more about, your background, ConsenSys, and what you do there?
Sure. So I'll start with ConsenSys.
Mhm.
ConsenSys is a blockchain software company that focuses on enabling technology to help people build on Ethereum. So very much helping developers or financial services companies stand up projects that are touching either public or private open source blockchains.
Mhm.
My role, I wear two hats. The first is as the co-head of a software business or pillar focused on financial services called Codify at ConsenSys. And then more recently, I've also taken a hat of chief marketing officer for the whole firm, which is an interesting thing to be doing when everybody's at home and watching Zooms and conferences and so on. In terms of my background, I've been a fintech entrepreneur, but from the U.S. So we all have different pockets uh, of kind of people building bits and pieces of different themes. And so for me, I got my entry into fintech in 2009 when I started a robo-advisor in New York. And so I grew up in New York, spent time on Wall Street, had my first exit with Lehman Brothers, and then that kind of quickly gave me permission to start building. And so I did that with a robo-advisor, which ended up turning into a digital wealth platform called Advisor Engine, recently sold to Franklin Templeton. Then I came over to London 2016 to do equity research around fintech and kind of really trying to find my way in discovering what themes were real, which themes were theater, which were deep and structural, which were just at the surface. And so started a fintech research practice called Autonomous Next that was bought by AllianceBernstein in the beginning of last year. And I joined ConsenSys in 2019 because I just think it's the coolest. Ethereum and Ethereum-based finance is legitimately in my whole career is the most interesting thing to happen to financial services.
Mm. And that's and actually there's many people who say the same thing that actually they've seen the whole market, they've seen all of the technology that underpins it, and everything that's happening right now actually has the potential to fundamentally change all of that for the better, doesn't it? Which is it's an amazing time to be working in banking, isn't it?
Absolutely, and I feel like there's so many there's so many narratives you can extract, and in many ways financial services can be this mirror, and it's mirror for human nature. And you have you have the intergenerational story, right, of somebody wanting to use neobanks versus use the incumbent banks, somebody wanting to use TikTok for marketing versus somebody wanting to see banner ads on taxis. Like, you have that bit in it. But then if you go deeper and you think about how technology has been trying to reformat financial services, it goes very much from, at least in the last decade, trying to do this thing of a new experience, new distribution, new interface. Very much what the neobank theme is about, what the robo-advisor theme is about, what a lot of InsurTech and Lemonade, those things are about. And you know, no offense to anyone listening, but like nothing's really changed. If you look at market share of either the people providing bank accounts or underwriting, or if you look at the volume of trading, it's all the same stuff. And I think fundamentally is because the object you're manufacturing, the financial product, is exactly the same as it would have been 10 years ago, 20 years ago, 30 years ago, 40 years ago. You've moved paper to electronic, but you haven't really changed anything,
Yeah.
and that's at the core.
Yeah, I completely agree with that. I mean, we've seen a digitization of the analog world, haven't we? We haven't really seen what digital truly sort of is, and it is interesting, isn't it? Because that pervades not only in, like, say, from a technological perspective, but exactly as you say, the products that consumers are consuming are exactly the same products that they've had for 150 years or more. So, I mean, where do you see, I mean, blockchain and distributed ledger technology, where do you see it really sort of having impact then? Because I mean, obviously people talk about cryptocurrency, but payments, I mean, there's a comment from Simon Taylor over on LinkedIn. So I mean, is digital identity really the thing that we're going to see this in? Like, the options for where it can be impactful is really, really broad, isn't it?
So um, speaking about industries being mirrors to human nature, I think blockchain definitely uh, benefits from the zeal of people who are projecting their philosophies and getting back a technology answer. And I think this can be good and bad, but the good is that blockchain-based financial services is really this completely open blue ocean for what can be built. Um, I boil down, um, you know, I, so the first distinction you should make is between the asset class of what are you getting exposure to when you're buying Bitcoin? What are you getting exposure to when you're buying Ether, or if you had bought XRP, whatever it is that you've invested in? That's one question. And I think there's a series of narratives around Bitcoin being the digital gold and so on. To me, that's interesting from a chief investment officer perspective, but it's not it's not foundationally interesting. There's lots of things I can buy that are weird. I can buy art, I can buy stuffed animals, it doesn't matter. There's the other direction, which is not the asset class, but the operating infrastructure. And I don't mean like forget Bitcoin, buy blockchain. I mean, if you look at something like Ethereum, which is a broad system for the enforcement of economic rights. It enforces property rights. So if you own something on a blockchain that is truly decentralized, meaning there's lots of people running the software, the same way that if you have BitTorrent running and lots of people are seeding and you can't take down a file because it's there. So if you have that file, you have it. On blockchain-based system, if you have a truly decentralized system and you own an asset, you actually own it. It is scarce. So if I give it to you, I don't have it anymore, which is completely not true for any other digital system.
Mm.
And so therefore you have this property rights, economic rights enforcement mechanism, which comes built in with audit. It comes built in with value transfer and settlement, and all these things that just happen to be really good for financial services infrastructure. And so for me, just kind of to land it, the answer is you can build Venmo, you can build Temenos, you can build Nasdaq, you can build Finastra or Envestnet, so portfolio management, lending and underwriting, core banking, all these things that we've been trying to reform bit by bit. We can redo and re-explore from a place where um, the field is just completely different and new, and I think that's the exciting part.
Mm. And as you say, the benefit to that too, I mean, this isn't just people who love technology getting excited about technology. The end user benefit of those things, as you describe, is very significant, isn't it? Because if you're looking to prove real ownership, if you're looking to revoke access to single items from a data set perspective, these things are real world problems that actually this can potentially solve, isn't it?
So let me try to land it one more time, which it's it's very it's very difficult to um, buy the blockchain narrative if you are looking in a quarterly time frame. If you're a large bank and you're saying for this quarter, I need 20% efficiency. I only care about artificial intelligence because I want to have better fraud systems and I need to show that in 6 months, and therefore give me a package solution. You don't realize that, hey, artificial intelligence is what controls all banking access because it's your face detection into your phone, and now Apple is in charge of all the banks, and has a market cap that is 10 times everybody else. And I think there's this play for blockchain too, where there is a misunderstanding about how does it give me the efficiency for the next 2 to 3 years, rather than understanding that it tilts what a financial product is.
Mm.
It doesn't have to tilt how it's distributed. You can put blockchain-based assets into a neobank, or you can put it into, you can put into Revolut or Robinhood or Stash or Acorns or Venmo. Like that's the distribution's not the point. The point is, how do you manufacture the asset? So the clearest analogy I have is, um, Spotify has a business model, which is you pay $10 and you get all the music in the world that has ever been all the time.
Mhm.
It is not much different than piracy. I mean, it really isn't. It's way more convenient,
Mhm.
but you're getting a million times more in value than what you're paying. And the only reason you can do it is because that's a digitally native business model. That comes out after you've consolidated the music labels, after you've broken their pricing,
Mhm.
after you've figured out how to create the experience, after you've had years of BitTorrent to stream all this data, et cetera, et cetera. Laid the pipes for bandwidth to absorb all of that data. And so when you look at blockchain, you also have to say, somewhere in the future, we don't know yet, there is a business model for financial services, which is going to largely be that all finance is free, and there is some rent, some gas, some access fee. But whether it's payments or banking or lending or insurance, all of that is just open source nonsense. Like, it's not hard, it's just there, and then you have layers to access it. And I
Mm.
think where we are today is a lot of companies are building their version of Spotify of CDs. They're like, we're going to have the Spotify interface, but really what we do is we send you a physical disc, and it's going to take you 3 days and all of that. And that's the hard bridge to create.
Yeah. And do you think, I mean, obviously there was, I mean, 3 or 4 years ago now, I mean, there's such a uprising of awareness of everything that blockchain could do. But do you think actually that has hindered to a certain degree? Because to your point a second ago, I mean, we're not there yet. We definitely weren't there, 4, 5, 6 years ago. But actually, from a mainstream perspective, in terms of banks, I think a lot of banks took a look and basically, decided it wasn't ready. And
Yeah.
actually, to your point, this is the evolution from a technological perspective, rather than necessarily I think the revolution that people were kind of expecting 4 years ago. So, I mean, is there an issue there potentially that big incumbent organizations in the mainstream have almost prejudged something? It's like trying to eat a cake halfway through baking it, right? What does that concern you?
So I think that this is a fluid open source technology, and the rocket that Elon Musk sent to the International Space Station was running the Linux operating system, right? Not Windows, not iOS, none of that stuff matters.
Mm.
It was running Linux, uh, and that's 35 years of open source development. And so, without a doubt, I think in 30 years, we're going to be running our financial infrastructure on mutualized open source public chains that reduce the question of how you account for a household, or how do you do performance reporting, or how you rebalance. Like, that's not an interesting question. That's not a question that anybody should be solving today anymore. That should just be out of the box for everybody.
Mm.
And so, I'm persuaded by that. But if you look at the moments 3 years ago, or the Bitcoin moment, and all those cases, these are just building blocks, and um, they will take innovation cycles over and over again. So for AI, there were 3 different innovation cycles over 50 years, and I think for blockchain, this will be similar. However, there are 2 symptoms I want to point out. The first is enterprise blockchain and sort of deployment by enterprises is increasing, and things are going to production. And importantly, more enterprises are starting to look at mainnet, which is basically the public Ethereum chain, rather than doing private deployments, which are more costly and have a larger fixed cost base. And so that's really encouraging. We're working on an initiative called Baseline with EY and a number of other tech players that allows data to be written to Ethereum and just be used very cheaply.
Mm.
And then the second bit is, this perception that things don't exist yet, or they're not usable, or they're not ready, or the interfaces are hard. And if you look at Ethereum now, there's a movement called decentralized finance, where a number of entrepreneurs have already built out lending projects and trading projects and asset allocation rebalancing projects, and they use an architecture which is this completely foreign new architecture that I'm talking about. And they're fairly performant. There's about 8 billion or so in stable coins and cash equivalents that's traveling through the system. There's between 1 and 2 billion in collateralized loans now in the system. So relative to the other fintech themes, it's actually a quite meaningful set of products that are being used by people. And so for me, that's really exciting.
Yeah, and it's interesting, isn't it? I mean, in some silly ways, moving away from everybody talking about blockchain and DLT to talking about DeFi actually has allowed banks, I think, to take another look at this without having the sort of pressures that they sort of had before, which is weird, isn't it? Because we've seen, I mean, HSBC have done very large scale tests with various different things that are actually running there with significant amount of monies with bonds, haven't they? So, I mean, this isn't, again, just smaller companies doing things. We are seeing big, global incumbent banks really sort of pushing into this space. I mean, what do you think? And there's a good question over on LinkedIn from Colin Bennett for you. What do you think is going to be the catalyst to switch the incumbents from that old, as we sort of describe it, to the sort of new world? I mean, is it going to be commercial pressures? Is it going to be sort of some sort of black swan event, or what do you think is going to be driving that revolution?
So there's it's a great question, Colin. Thanks for asking. It depends what your lens is for what is it that you're trying to switch over. So there, again, going back to crypto assets and saying, when will people own Bitcoin and ETH in their portfolios, and everybody has a 1 to 5% allocation and is just like any alternative. I think that is either already there or within our grasp of 5 years. I think that's really soon. If you think about the curves of how hedge funds or private equity were adopted into portfolios in the 2000s, where it just ramped as soon as the endowment world led that asset allocation, I really believe that crypto asset exposure, especially if crypto networks are performant and do real work and are interesting, I think the purchase of the asset class is fairly straightforward, and nothing fundamental really has to change for that. In terms of the operating infrastructure, that is really hard, and the spread on that is anywhere from 5 to 30 years, the way that large platform shifts happen, right? Like when did social media get adopted? When did mobile get adopted? Well, it's always adopted in some form and at different pace. I do think there are there's 2 clear things that can happen to push it over. The first is consumers, and the second is, I mean, it's bottoms up or top down. simply. So bottoms up is consumers, and as it happened in 2017, when lots and lots of people bought Bitcoin and then showed up to their financial advisor and, what do I do with this? I think similarly, I can imagine a world where decentralized finance gets millions and millions of users who are getting, 5%, 10% annual interest rate in an environment where um, I don't need to give you the economic argument, but let's say we stay at negative rates for the next couple of years. I can see millions of people engaging in DeFi and getting those returns, and after a while, at least the fintechs who have an economics problem starting to engage there. We already see this
Yeah.
with trading. Then on the top down side, it's China and Libra, and I think HSBC will react if um, the Asian zone is using a digital yuan, and Singapore and the Philippines are all traveling on blockchain rails, and all the supply chains are tracked using this technology on Fabric. Like I think at that point, it's not that hard to imagine HSBC saying we need to integrate. And similarly, in the US, if you have the digital dollar, or if you have the concepts of universal basic income, and you start having actual money flows that are blockchain native, you're going to cause the banks to flip in reaction. So I would see it that way. It's hard for me to see the banks working really hard to blow up their own economics, in the same way that during the 2000s, the music labels were trying to build digital rights management technology, and that's not really an answer end of the day.
Didn't go so well, did it? I have to say, having seen that movie before. But I think like you say, the interesting thing is from an asset class perspective. Then, actually, to your point, this isn't really a dramatic change for the banks. They're used to dealing with fluctuations in valuations of anything, and therefore all their systems would be able to sort of deal with selling any of those assets. I think the difficult thing for big incumbent organizations is going to be, I mean, they don't like to select. I mean, can you imagine the procurement department going through a process and deciding that actually they're going to do something radically different at the end of it? It just doesn't happen.
Yeah.
So I think almost the stability and the proof, the proof points, is that it's either going to have to take, as you say, some banks somewhere with senior leadership who really, really, really understand technology to take quite a big leap of faith to be first, which then sets the agenda, I think, for the whole industry. Or it's going to take startups making things and scaling things and doing things that big organizations can't really do. Because, I mean, at the end of the day, the problem that the banks have right now is not a worry about fintech apps or whatever. It's the cost structure within their banks, and this is actually where I think the opportunity is for this space, because if it's going to cost a couple of £1 billion just to keep the lights on at a bank, and fundamentally you can strip 50, 60, 70% of that back office cost out by deploying these types of technologies, then while increasing the security, while increasing the trust in the network, like those things really turn, get CTOs of major banks really excited, which I think is probably the reason why so many people are, still really actively sort of pursuing these things. But it's going to take a royal kick up the arse, isn't it, to make this happen? Which, at the end of the day, any technology requires quite a significant change, doesn't it?
Well, and the nice thing is that change actually does happen. So just rewind back 15 years. So let's start at the top. If you wanted to get investment advice, you would pay 150 basis points. Now you would pay 25 basis points. Your minimum account size would have been 50,000 or 10,000, and now it's nothing. If you wanted to buy you lived in London, you wanted to go to France and buy a sandwich, you would pay 6% of a FX fee, and now it's zero.
Yeah.
So incremental change happens, and then more deeply, more structurally, you look at Goldman Sachs today. Goldman Sachs is trying as hard as it can to be a retail company. They spent $1.5 billion underwriting Marcus, and another billion buying United Capital and Folio FN. so that they can serve the retail customer.
Mm.
Goldman Sachs, right? Like, it would have been unimaginable 15 years ago for that brand to pivot as hard as it could to compete with Lending Club and Betterment. Unimaginable. And then, of course, you end on the concept of, does Amazon offer financial services? Is Apple a bank? Is Google a money manager? And the answer is like, yes, of course. 3 years ago, um, yes, they are. And I think if you do step out and look at the transformation that's happened over just the last 5 years, you're going to see really different playbooks for the players in there. So I can definitely see if the cost savings that you're describing can be materialized in a tangible way. Um, I can definitely see it happening over the next 5 to 10 years.
Yeah, we definitely agree. I mean, the 11FS is based on the view that we see the fabric of financial services changing over the next 5 to 10 years, and I think all of this is up for grabs. I think the difficulty, like you say, with I mean, Google or Apple or whoever trying to get into banking is so far they're using big incumbent banks as the rails to make those things happen, aren't they? I think maybe only Samsung has gone out of that by using Curve in the UK, haven't they? They're using newer organizations to gain access to more traditional financial services. So I think, as you say, as it starts to change, then you can start to see the market dramatically getting away from people and moving away from the model where the big banks are the big player in that space that control the destiny of the industry, the what anybody can do and how it can happen. Bigger boys and girls like the Amazons and Apples coming into the world. This whole thing and Facebook, obviously, thing that, like you say, they're doing with Libra. This can change so dramatically when the power dynamic changes in the industry, isn't it? But one more thing I want to kind of talk about, because I mean, very quickly, we're running out of time. Just like 30 minutes has disappeared again. But ConsenSys has recently announced the launch of Codify Compliance. Can you tell us a little bit more about that product?
Of course. So Codify is the financial suite. We call it the financial operating system. You can think of it the same way you think about Microsoft Office or the Adobe suite. So it's a suite of use cases in financial services that sit on top of blockchain.
Mm.
So whether it's digital assets and doing issuance, or whether it is markets for tokens and doing exchange, or whether it's payments and thinking about payments processing, these are modules that we build out sequentially, because we see that financial institutions take these a la carte and then they like to bolt them on together, and so it's very much aligned to how our clients think about it. And so the Codify Compliance launch, which happened, I believe, 2 weeks ago, is goes along with our thesis of convergence. We think it's really important for institutional capital to cross over into these decentralized finance systems,
Mm.
and vice versa. It's important for these decentralized finance systems to have rigor and institutional quality so that people can safely use them. And so the compliance module focuses on a concept called KYT, Know Your Transaction, which is not KYC. It's not, plug in your identity and we'll track you through it. It's very much let's look at on-chain data, so information on the network that's transparent and visible to all, and let's build intelligence about various money flows and the quality of those money flows. So for example, if you're an exchange or you're a DeFi project, or maybe if you're a bank and you want to bring people into your ecosystem,
Mm.
but you have a sensitivity to anybody that's touched ICO project, or that has touched a mixer, like an anonymizing service for the monies that mixes it together with other people's, or there's a known scam. These are all available data that can be extracted from the blockchain, and then we visualize it and we track it and we risk weight the different addresses and money flows. And so you, as the project, can make a decision: do I want to enable this? Do I want to do business here? Or maybe I don't. And in the worst case, if you don't control your network at all, if it's just completely open, at the least you're able to generate this for like a regulator that might have questions over what's happening inside of your project. So
Mm.
we really think of it as trying to help the ecosystem not grow up, but be a little bit more aligned and allow institutional capital to come in.
That's amazing because, as you say, the traceability of those funds then that are moving around the system are, you can trace things back to the origin in terms of where that money came from, right? Which is that level of transparency in any system is, I mean, regulators, governments, this is something that they would very much like to have without necessarily going into the individual transactional information, but really knowing that the money circulating in the system is clean, right?
And it's real time. It's not, it doesn't. It's a big data set, so we crunch it, but it is real-time data. It's always the network is always the network. It's 100% uptime production.
Yeah.
There is no downtime, and the reason you can do things like this is because there's no abstraction layer between the actual security or the actual bank account, the deposit, the money. There's no abstraction between that and the software that applies to it, the workflows and the use cases, right? So if you were to take either a core banking system or a portfolio management system, you might have some asset that sits in one place in a vault or in its CSD or some other institution. Then another institution on top of that will query, usually through some gigantic file, FTP overnight, and that will have identifiers, and then a million other systems will connect to that and look things up using QSIPs or some other abstractions, and then you send that into systems that are meant to take actions, whether move money or open accounts or rebalance, and you have all these massive breaks between these systems because you're not actually dealing with an asset, you're dealing with some representation. On a blockchain-based system, that is impossible. The only thing you can deal with is with the asset itself, and so it's just a fantastic improvement.
Amazing. Well, I mean, it's great to see, as you say, the industry is developing and changing so quickly. It's great to see, as you say, mainstream applications that actually big organizations can start using now as well. So, I mean, I hope the launch goes really well. Like I say, a couple of weeks ago, this kind of came out. We'll have to get you back on in a couple of months' time to let us know how adoption's gone, and I imagine in a couple of months' time the industry will have changed even more. So I'm afraid it's past the top of the hour, so we better let everybody get on with their days. Unfortunately, I'm sure everybody's got a busy Tuesday ahead of them. But Lex, thank you so much for joining us. I don't think you needed the caffeine. I think.
Check out ConsenSys.net for our main site. If you want to take a look at Codify, that's going to be codify.consensys.net. And I'm easy to find, just Lex Sokolin on Twitter.
Fantastic. All right. Well, that's all we have for you today, I'm afraid, but we will be back tomorrow. We've got a mother-daughter duo tomorrow. So we've got Laurel and Ishil Quinn, who is the co-founders for the Fintech Good Sustainability. Really, really interesting company. Been doing amazingly well over the last couple of years as well. So tune in tomorrow to learn more about what they've been up to. We'll see you guys at the same time, same place tomorrow. Have a great day, everybody. Stay safe. Goodbye.